Wall Street has been buzzing with anticipation as they prepare for a disastrous stock market crash when financial and economic conditions shift radically. Several seasoned investors have warned that the widespread speculation driven by the US government and the Federal Reserve will not be able to keep asset prices stable indefinitely. And a dramatic reversal is on the way. Michael Burry, the CEO of Asset Management and a significant short investor, is one of them, and he appears to be correct about an impending financial calamity. In a recent remark, the hedge fund manager, who famously bet against the country's housing market in 2008, emphasized that the bond and stock markets are especially vulnerable. Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started. Bond and stock markets depend on a Fed stripped of all credibility, he said in 2020. Jerome Powell, the chairman of the Federal Reserve, has pledged to do whatever it takes to prevent a financial collapse, claiming that the bank's policies have resulted in the worst inflation index in history, with the Fed being forced to raise rates 3 times this year, likely popping all the bubbles. It has sparked and caused a historic market crash. With inflation's levels this high, the bank may have boosted rates 7 times this year, according to a new projection provided by JP Morgan. If it is to achieve some sort of economic balance, things will have to become far more turbulent than most people expect. Burry had warned at the end of 2020 the central bank's policies would spark inflation, as we've never seen before. Prepare for inflation, he tweeted back, then even noted that we were on our way to hyperinflationary atmosphere similar to that of Germany in the 1920s, stating that everyone was playing the market at the time and trading volumes were soaring. Does this ring a bell? It surely does now, if it didn't in 2020. He also shared a classic Warren Buffett statement about how inflation discourages companies from investing, deteriorates the value of future earnings, and results in negative real returns for investors. That's the say with inflation rising almost 7%. The outlook for volatile stocks is particularly bleak. As a result, the investor revealed that he had bet against Elon Musk's Tesla and Cathie Wood's ARK Invest to invest in tank bubble favorites. It turns out that both of them experienced significant crashes toward the end of December and the beginning of January. The tank bubble eventually ruptured. Burry's account had taken another hit. It held bearish put options on about 1.1 million Tesla shares, according to the Scion CEO. Puts on Cathie Wood ARK Innovation ETF, a prominent Tesla supporter, were also disclosed in a series of tweets. The experts sounded the alarm once more. Can Tesla fall 80, 90%? After 2000, many high flyers did. He wrote Tesla has already lost billions after CEO Elon Musk began selling his own company's stock to reportedly pay taxes, according to the Bowery, which is simply a technique to cash in money before a greater drop in share prices. Musk claimed he was selling because he knew the electric vehicle stock was overvalued, but he didn't need the money at the end of the day. He just wants to sell Tesla, Burry added. The market veteran has reinforced his earlier warning that the market is in a speculative bubble and that historic stock market disaster is on the horizon. He contrasted the hoopla over Bitcoin, electric cars, software as a service company, and meme stocks to dot-com and housing bubbles, as well as today's skyrocketing prices and margin debt. He warned that the speculative zeal had propelled most assets to absurd heights, from which the collapse would be dramatic and terrible. Burry believes that today's overvaluation is far more concerning than what investors faced in the 90s, and today's level of speculation is far higher than it was in the 20s. Another worrying factor for the financial markets, according to the investor, is the rising geopolitical tensions around the world. He believes we are on the verge of an economic disaster. The Securities and Exchange Commission and the Fed are taking no action to stop it. Given the circumstances, it's easy to see why he pared down on his US portfolio from more than 20 assets to just 6. His overall worth was reduced from nearly $140 million to approximately only $42 million. In a recent interview, the founder of Burryology, a subreddit of Burry's closest fans, said that the sales were a massive warning flag that Burry was preparing for the mother of all collapses. He is, of course, far from alone. Many other billionaire investors, including Jeremy Grantham, Stanley Druckenmiller, and Jeffrey Goodluck, are preparing for the crash by sharing their predictions with clients and online followers. In recent weeks, even Shark Tank star Kevin O'Leary, market prophet Gary Schilling, and 30-year veteran John Wolfenbarger have issued warnings about the impending crash. Jeremy Grantham, the founder of GMO, has previously stated that the market is in a full-fledged epic bubble, and explained that today's bubble is still standing because of investors' disregard to risk, an unfounded bullish sentiment. You knew last year this bubble was going to be the real McCoy, but you didn't know if it was going to break next Wednesday or a year later. One by one, we've checked off every condition that a glorious bubble needs in terms of crazy behavior. This has been crazy by a substantial margin than 1929 and 2000, he said in an interview with Bloomberg, adding that the latest market upswing does not mean that the correction is over. The market can go up on a bad news and go up on good news. Those are the characteristics of a bubble. There's nothing much you can throw at it when it gets going, said Grantham. I've never had any illusions about my ability to time the bubble breaking, he continued. According to the legendary investor, when the market is recording such an illogical level of enthusiasm, the bubble has always burst within a few weeks or a month, not a few years. He said that the coming crash will result in the most profound wealth loss our society has ever seen. This time, there's a stronger belief that in the idea that prices will never fall, and all you have to do now is buy, because when the downturn comes, it will likely be bigger and better than anything else in US history, according to Grantham. On the same note, Stanley Druckenmiller stated unequivocally that we are in the midst of a raging mania in all asset classes. For that reason, the Duke and the family office chief decided to pull his cash out of equities in a matter of months before things go downhill. I won't be surprised if we're not out of the stock market by the end of the year, just because the bubbles can't last that long, he said. Meanwhile, Double Line Kavanaugh chief Jeffrey Goodluck highlighted that equities are undeniably expensive and that many in the market right now are ignorant of all the metrics of valuation. He forecasted a huge drop in stock prices, and that retail investors who have amassed and devalued stocks and other speculative assets will abandon them if prices begin to fall. We'll see a massive unwind of a lot of money that thinks the stock market is a one-way street, according to Gundlach. Similarly, Shark Tank star and O'Leary Funds chief Kevin O'Leary alerted that investors' stubbornness will make them learn their lesson. The generation that's trading right now has never gone through a sustained correction. It's coming. I don't know what will trigger it, but they will learn their lesson. He continued, if you have a lot of leverage, it's a hell of a lesson because you end up in negative net worth position. But you do learn from it. The veteran forecaster Gary Schilling added that financial markets are about to nosedive, and even though he's said to be uncertain of when, speculation has outrun any logic. And at some point, there's going to be a lot of blood on the floor. On top of all that, the founder of bullandbearprofits.com and former Alliance Global Investor Security Analyst John Wolfenbarger has listed a series of bearish indicators showing signs of weakness in the market in the weeks ahead. The first of them, the VIX, which reflects expectations for volatility in the market, has started to soar as its percent price oscillator to positive. This shows that investors have a higher risk appetite, according to Wolfenbarger. Wolfenbarger claimed that given current investor attitude, positioning is even more extreme than it was during the previous bubble crash, using data from the right X asset ratio. Furthermore, the central bank's measures appear to have backfired, putting growth at risk, which is expected to send a wide variety of stocks into the correction zone. Following the initial panic caused by the health crisis, the Fed and banks raised the money supply by more than 40%. Money supply growth has slowed drastically to only 7% according to the Austrian money supply measure. This suggests that the economy will slow going forward, particularly with the Fed tightening this year. Wolfenbarger wrote, once more, the yield curve measured as the spread between the three Years and 10-month Treasury yield is also at weak levels relative to prior economic booms and seems to be moving sideways. According to him, a steepening yield curve indicates more vigorous economic growth when all of these factors are considered. We have a highly risky investment environment. At a time when the economic growth indicators are exhibiting diminishing tendencies, investors have become overly invested in riskier growth equities. What is it about this circumstance that is so concerning? Are they in the most vulnerable position because of the market's high valuations at a time when substantial growth is in doubt and cash is in short supply? He kept going. To put it another way, this massive stock market bubble is on the verge of collapse. Those who have previously seen the indications are seeing them again right now. Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.